Another day of light trading on the local bourse, but the direction was mostly up. I spoke earlier to Marcus Padley at Patersons Securities. Well, Marcus Padley, a modest rally, and it seems only mining and energy sectors going backwards.
It's the same old story, Ticky. The resources getting left behind by the rest of the market. Although the whole market, having had an almost 10% rally, has sort of gone quiet. Volume was low again, $3.7 billion worth of trade, below the average of over $4 billion. And even the financials sort of looking a little peaky now, and we all seem to be waiting for the Bernanke speech at the Jackson Hole Symposium on Friday, so we'll wake up to that on Saturday.
Let's go to some results then. Something of a jackpot for Aristocrat Leisure in its results.
Their CEO's comment was that their turnaround has turned into a reality rather than a hope, I assume. Their profit was up 40%. They're doing better in Asia. They've got a couple of new games out in Asia. Their North American sales have gone quite well. The turnaround's not complete. You know, it's a company that's commenting this is our third or was it fourth quarter of profits. You know, obviously they've had a terrible track record. The results have polarized some stocks, and this is a stock everyone's jumped on today for that continued recovery.
All right, well, investors in Centro Retail Australia seem to have held their nerve in the face of a $223 million full-year loss. What sort of picture was the company painting?
The interesting comment from them was about the retail environment, which, of course, they described it as, I think their adjective was mixed. It's obviously challenging, but the result was actually okay. If you looked at the underlying number, the market was expecting about 125. They came in about 123, so it didn't really disturb the scorer.
And I see Glencore is buying into the Integro edible oils business of Goodman Fielder. What are your thoughts on the deal there?
Well, two edible oils businesses actually, worth $472 million between them. I think Goodman Fielder gets $165 million, of which $25 million is a profit. It all goes to pay down a bit of debt. They were looking to sell these businesses to Cargill, who's double the size of these two businesses put together. It's the #1 player, but they got blocked by the ACCC. So GrainCorp sort of slipped in where Cargill wasn't allowed and bought the businesses, and there doesn't seem to be a lot of synergy benefits from putting them together, but GrainCorp is basically making use of a very decent rise in the share price on the back of soaring grain prices. They're having a 1-for-11 entitlement rights issue at a 10% discount. They're also issuing shares to one of the owners of one of the businesses. So using their paper really at a good point in the cycle. They even call it opportune themselves. We'll see how GrainCorp come out of their trading halt, but Goodman Fielder reacted very well to start with, but it cooled down later in the day.
All right, Marcus Padley, thank you very much for joining us.
My pleasure, Ticky.